Traders foresee a big move brewing in the stock market. In today's cover story, General Motors steers in a new direction. Plus, no thanks. Consumers boycott retailers that are open on Thanksgiving. And movie madness ensues as two hits fight for number one. First Business starts now.
You're watching First Business. Financial news, analysis, and today's investment ideas.
Good morning, everybody. I'm Angela Miles. It's Thursday, November 13th. In our first look, tech in check. After the bell last night, Cisco shares rallied after topping Wall Street estimates. The tech giant also says its CFO will retire at the end of the year. Kelly Kramer is named as the replacement. BlackBerry's survival plan. The smartphone maker lays out details today of how it intends to stay alive. And a big day for retailers as Walmart, Nordstrom, and Kohl's report earnings. After the close last night, JCP shares slid after reporting a sales miss, but its loss was smaller than expected. In yesterday's market action, the Dow and S&P closed just below record highs. Both gold and oil sold off. Trader Todd Horwitz of AverageJoeOptions.com joins us now. And Todd, what's up, as you always say, with this rally? Is the rally growing weary?
Good morning, Angie. What's up with you? Look, the rally continues. We saw yesterday new print highs in the Dow. We see the Russell trying to make another all-time new high, which is interesting as it came from almost bear territory to now rush that back to new highs. I am still bearish, but there is a real big move brewing. Just look at how narrow the daily trading ranges have become over the last couple of weeks.
So you see a big sell-off coming?
I see a big move coming. I think it'll be to the downside.
Let's talk about OPEC and oil. Oil continues to sink here, Todd.
Oil has been, as I've said, since oil was 107, sell it, sell it, sell it, and I'm going to continue to sell it. Now, look, I'm not selling it down here. If you're not short oil here, you have to wait for a rally because there will be some vicious rallies in oil. But oil, OPEC looks like they talk about a possible floor at 70. Now, I think that oil is probably going lower, which also to me indicates a weakness in the overall economy. It is helping the transportation industry, but it really looks like an overall weakness as there's not a big demand. But it looks like it wants to go much lower. And remember, in 2009, we were at 33.20 after being at 147.
Thank you, Todd.
Thank you so much.
Chuck Coppola is at the ready this morning with a report on shopper backlash. Chuck.
A growing social media campaign is encouraging shoppers to stay home on Thanksgiving. The Boycott Black Thursday Facebook page already has more than 80,000 likes. Organizers of the campaign may be disappointed, though. According to PricewaterhouseCoopers, 49% of American shoppers do plan to shop on Thanksgiving, either online or in person.
Well, Walmart likes Black Friday. Instead of a single day of doorbuster sales, the world's largest retailer will be offering 5 days of Black Friday deals starting on Thanksgiving. Investors will get a glimpse this morning of Walmart's holiday sales forecast. Also making news, the New York Times has uncovered a memo urgently telling Walmart managers to quickly discount aging meat, dairy, and baked goods before the expiration dates.
Ahead of the critical holiday shopping season, Macy's reports mixed earnings. The company lowered its sales outlook for the fourth quarter, which includes the Christmas season. However, last quarter, Macy's said earnings were up 23% after it cut expenses. Also, according to Reuters, it's reporting that labor contract issues and equipment shortages on West Coast ports continue to impact retailers, including Macy's. Those setbacks could delay shipments of merchandise by 3 weeks. Investors remain cheery on Macy's, though. The stock rallied 5% yesterday.
Consumers will be unwrapping a lot of tech this holiday. The Consumer Electronics Association forecasts consumers will spend $33 billion on technology gifts this season. Some of that will be spent on newcomers such as GoPro.
Emerging technologies this year are showing up on the wish list for the first time, including GoPro, action camcorders. GoPro is the big player there, so I think you're going to see a lot of action on that this year. And then smartwatches.
Jim Barry, the Consumer Electronics Association, expects many shoppers will skip smartwatches from LG and Samsung and wait for the first watch from Apple when it's released in 2015. Tablets are still expected to reign as the most popular gift, followed by laptops, TVs, and smartphones. Apple shares hit a new high yesterday of $111.
In our cover story, General Motors has been in the news a lot lately. Its president, Dan Ammann, gave a lengthy interview to the Wall Street Journal on what's ahead for GM And though many things were expected, layoffs weren't necessarily one of them, which is where our coverage begins. General Motors is cutting production and laying off more than 500 workers at 2 assembly plants in Michigan. It's to reduce inventories of models that are selling slowly.
I think the layoffs indicate that GM is trying to create output from its factories that aligns with what shoppers want. So shoppers are moving toward trucks and SUVs.
Most of the layoffs will be in Lansing, where GM makes Cadillac luxury sedans that have dropped 5% in sales this year, while German competition enjoyed double-digit growth. The remaining layoffs will be where GM builds Buick Verano and Chevy Sonic cars. That's because cheaper gas prices have decreased demand for smaller, more fuel-efficient vehicles. But profit margins per vehicle have been high due to the types of vehicles GM has sold.
So if you look, their truck sales are up much higher than their car sales on a percentage basis year over year. And what that's doing is that's fueling higher priced vehicles going out the door. That's improving profits for GM, kind of keeping them above ground right now despite the bulk of all these recalls.
Dan Ammon, GM's president under CEO Mary Barra, lists a number of changes during his tenure that began in January, including moving Cadillac into a separate business unit, with sales and marketing transferred to New York next year. In Europe, GM has taken the Chevrolet brand off the market in order to concentrate on its German brand Opel. Still, recalls have kept an unflattering image of GM in public view.
Roughly 50% or so of the recalls this year, the record recalls this year, have come from General Motors. They have been spared the bulk of these Takata airbag recalls, and so the news has kind of moved on.
Even the World Series gaffe by a GM car salesman was quickly turned into a tongue-in-cheek advertisement within a matter of hours, far different from the old GM. But what we don't know yet is how much all of this talk about change translates into improved engineering and quality control. Analysts say that'll take longer to bear out.
Fees charged by attorneys and consultants in Detroit's bankruptcy case are raising eyebrows. Reports say the total is approaching $200 million. That massive amount may put the Motor City at risk of meeting its terms of its bankruptcy exit plan. Detroit's emergency manager claims the fees are closer to $144 million. The mayor of Detroit is concerned consultants are charging millions while the money could be used to hire police officers. The next bankruptcy hearing is November 24th.
Wild moves in SeaWorld stock could be enough to make investors seasick. The stock dropped 9% yesterday after revealing that the theme park is still facing falling attendance rates. Since last year, SeaWorld's stock has struggled to stay afloat following the release of the documentary Blackfish, which accuses the company of inhumane treatment of its whales. Last quarter, attendance dropped 5%, profits fell 28%. David Johnson, the CEO of branding company Strategic Vision, says SeaWorld needs to address these accusations.
SeaWorld has kept all of this alive by their lack of crisis communication. The one thing any major organization needs is to have a plan ready to address a crisis when it arises. This has been going on now for over a year, and SeaWorld has never had a coherent response to it whatsoever.
SeaWorld says attendance fell due to a combination of factors, including negative media attention in California, along with a challenging competitive environment, particularly in Florida.
AT&T CEO plays hardball with a net neutrality controversy. Randall Stephenson is halting expenditures. Stephenson says 100 cities will not be getting fiber optic internet service as planned. Stephenson adds his company will hold off until the government decides how to regulate broadband providers. The move is seen as a response to President Obama's push for broadband service providers to be regulated and for the internet to be free.
President Obama and the president of China set pollution plans in motion.
I commend President Xi, his team, and the Chinese government for the commitment they are making to slow, peak, and then reverse the course of China's carbon emissions.
President Obama revealed plans for the U.S. and China to crack down on pollution standards. The president says by the year 2025, the U.S. will reduce greenhouse gas emissions by between 26% to 28% of levels set in 2005. In China, the country will cap its carbon emissions by 2030. Republicans were quick to criticize. House Speaker John Boehner called it the latest sign of the president's, quote, job-crushing policy.
Better late than never. Microsoft issues an emergency patch for a 19-year-old bug. Dubbed Windshock by many, the flaw has been in Windows software since 1995. The bug allowed hackers to remotely take over a PC.
An overcoat, photographs, even love letters, all from Marilyn Monroe's estate and all going up for auction. On December 6th, Julian's Auction House will offer for sale a trove of personal items from the starlet's life, including love letters to and from ex-husbands Arthur Miller and Joe DiMaggio. Starting bids for those letters are in the $2,000 range.
Taking a look at the economic calendar for today, its initial and continuing unemployment claims, the JOLT jobs openings for September, natural gas inventories, crude inventories, and the Treasury budget. On the earnings calendar, Nordstrom, Applied Materials, Kohl's, Walmart, Weibo, and Viacom. Still to come, are activist investors about to destroy Yahoo stock? Plus, Interstellar is a box office runner-up, why it was beat out by Disney. And finally, a lagging sector of the economic recovery starts to pick up steam.
Six banks are fined more than $4 billion for rigging foreign currency markets. J.P. Morgan Chase, Bank of America, and Citibank in the U.S., and HSBC, Royal Bank of Scotland, and Swiss Bank UBS in Europe have been collectively fined by U.S. and U.K. authorities. Regulators say traders use private online chat rooms to coordinate buying in order to shift currency prices. The traders gave themselves nicknames such as the Three Musketeers and the A-Team. An investigation into possible wrongdoing by England's Barclays Bank continues.
The largest deal in the banking sector since the financial crisis is behind the sudden surge in Susquehanna stock. Susquehanna Bank shares ramped up almost 33% Wednesday on word it's being bought out by commercial bank BB&T. The cash and stock deal is worth about $2.5 billion. BB&T plans to cut jobs and close offices to make that deal profitable by the end of the year. The deal gives BB&T access to customers in Pennsylvania, New Jersey, and Maryland. The bank is already popular in the South. Bill Mueller has an update on mid-level businesses.
Angie, as you know, we track several reports on First Business that measure different parts of the economy. Well, middle market companies, though they represent only 3% of businesses, they still generate a third of private sector GDP and workers. The National Center for the Middle Market just put out their third quarter report on this sector. Let's talk to Tom Stewart. He's the executive director of the organization. All right, Tom, let's look at the raw data first. Number one, revenue growth.
The middle market has had a really strong year. Year-on-year top-line growth in the middle market, 7.5%, which compares to 5.5% for the S&P 500, a really bang-up year.
All right, what about the important construction industry?
Construction has been the last industry to pick up from the recovery, from the crash, and was hit really hard 5 years ago. And we are now starting to see a pickup in demand and employment in the construction industry. So the recovery is filling out into that industry as well.
So that's kind of that's a bellwether sector, you would say?
Well, it's been a laggard, so I suppose it's not a bellwether in that sense, but it's the last one to get out of the gate, and we're now starting to see some good forward movement in construction. We'll see what happens during the winter, but it's good news so far.
All right, now we're talking about growth. You could say that the retirement of baby boomers is kind of a growth area, and you looked at the impact from that too.
Yeah, the baby boomer impact is going to show up in middle market companies as that giant rabbit in the python is, slowly turns into retirement. We asked middle market CEOs, is this an issue? And it is getting on their radar screen. For some companies, a pretty intense issue right now. For others, they're recognizing that it's going to be there, and they're going to have some talent issues they're going to have to deal with in the years to come.
Well, we know the Democrats lost the election in part because of stagnant wages, and you assess that too. What would you learn there?
So we see the picture in the middle market that's similar to the national picture with one exception. Middle market job growth is running very high. It's sort of at 3.6% anticipated job growth for next year and 3.5% last year. So good growth in the numbers, but not a lot of growth in wages yet. Employers are not saying they're facing wage pressure. Employees are not saying they're seeing nice raises.
That's interesting. All right, Tom Stewart with the National Center for Middle Market. Thank you so much.
Thank you, Bill.
Coming up, the internet stocks one money manager is applauding. And after the break, why Disney investors are cheering a box office hero. Blockbusters are battling it out at the box office. Our movie man is here with his view. Hello, Eric.
Hello.
So Disney came in #1, but it was a close #1.
It was a close #1. I mean, Interstellar had a couple days jump on Disney when it was released in IMAX a few days early. But the thing when you know people are sort of quick to say, well, one film disappointed while one film was champion. It's quick not to say that the loser per se was rejected by the public, because obviously both films did very well. It's important to put it in context.
Let's show them what we're talking about. Here's what happened at the box office over the weekend. So you have Big Hero, Disney film, coming in at $56 million, but then Interstellar comes in at $47 million. So they're almost both $50 million winners, and that was big for the box office. That's what the critics really watch for.
Right.
#3, Gone Girl, 4, Ouija, and 5, Fury. But those two numbers at the top, that's impressive.
It's very impressive, and even more impressive, Interstellar, when you break it down, if you want to get very specific about it, it's the top original live-action film to kick off the holiday season of all time. So that's saying something. You know, we're eliminating sequels and animated fare and stuff like that. But you know, when you compare it to movies like Inception, which everyone's just like, well, it didn't open as well as Inception. That was a summer release with Leonardo DiCaprio. Okay, so you have that. Then they're saying, well, it didn't do as well as Gravity last year. That had two big stars, Sandra Bullock and George Clooney, and also had the 3D, surcharge going for it too. So Interstellar is right in line with those movies.
But at the same time, I have to say, Interstellar, one of your favorite films of the year so far. And as far as Disney, investors have been getting it right. The stock continues to climb higher.
Yes, certainly.
And Disney really fooled the critics. It did better than a lot of people thought it would.
With Big Hero 6?
Absolutely.
Well, Big Hero 6, we said last week, I figured it was going to be doing somewhere in the high 50s, maybe even the low 60s.
Okay.
I thought Interstellar was going to do much better. Fandango had the pre-sales very high on the thing. That's why I was sort of believed that it was going to trump the Big Hero. But, animated fare is usually a good bet to go with that.
It was the right bet. Taking a look at what's at the box office for this weekend, Dumb and Dumber 2. No, we did not misspell the word 2. We get it. And Beyond the Lights.
Well, Dumb and Dumber 2 is the film that everyone's hoping and assuming is going to take the #1 spot this weekend. It's been 20 years since we had the original Harry and Lloyd film directed by the Farrelly brothers. And now, it's 1994.
Wow,
1994.
Gosh,
It's a
ago.
big
Feels
year.
like yesterday.
Big year for Jim Carrey. He had Ace Ventura, he had The Mask, and he had Dumb and Dumber all in that one year. And now it's 20 years later. Carrey's box office clout is not quite where it used to be. And we're going to see if people sort of react to this one the way they reacted with Anchorman 2 last December.
Beyond the Lights. They love it on Rotten Tomatoes. It looks like some sort of bodyguard-ish movie.
So that's what some people have been comparing it to. I haven't seen the movie yet, but it does have sort of a bodyguard feel. A young singer, sort of manipulated in the system, doesn't really want to play the sort of the sexualized version of herself. So we'll see how that does. I think they'll probably come in like 4th this weekend. But Dumb and Dumber 2, if that doesn't hit #1, you'll see some people panic.
Thanks for stopping by.
Sure thing.
Just ahead, what's the better buy, Yahoo or Twitter? A money manager weighs in after the break. Yahoo is very much in play right now. Joining us is Matt Shapiro, president of MWS Capital. What do you think about the situation? There's some news that Marissa Mayer is really under pressure. There's calls by some activists for Yahoo to merge with AOL. What do you think about the stock?
Well, who knows? It's actually finally around the price I thought it would be. Finally catching some traction. Of course, most of their market capitalization is due to their Alibaba stake, which now has done so great. I don't know who can complain about her stewardship when the stock has done so well this year, but of course the Yahoo business, of course, doesn't contribute so much. It seems to be these activist investors have such a tried and true formula. They buy a bit of the stock, they get it up, they make a lot of noise. Whether or not any of this plays out to everyone's benefit, that'll be seen.
Right. In this case, Yahoo shares crossed $50 yesterday. That was a pretty tremendous move, Matt.
Yeah, it's really these internet companies that are the story of the market this year.
All right, any thoughts on Spider Utilities? This seems to be a play as well.
I invest in utilities. I don't invest in ETFs, of course. And I think of a lot of that market chatter you're seeing is a little bit of the effect of these ETFs. It's kind of a trend I don't really like. A utility is a long-term holding, not, I wouldn't say, a widows and orphans kind of holding, but when it gets packaged, even the best and most conservative investments, when they get packaged into these ETFs, sometimes it's a little troubling when there's just stories about lots of options activity and market action in what is essentially a conservative segment of the marketplace.
Last but not least, would you be a buyer of Twitter? Twitter had its analyst day yesterday.
These are the stocks that are working. I have to say, I own a tiny bit. If you like Twitter, you think they can have some synergies here, up strong yesterday on lots of anticipation, I think you can make a case for it right here.
Thank you for all of that information, Matt.
You're welcome.
Well, that's a wrap for today. Coming up tomorrow, Traders Unplugged. Find out why the guys are at odds over low wages and fat corporate profits. From all of us at First Business, thank you for watching.